Hello friends, how are you doing? Yep, we're going to do a walk and talk today. We had fake number day on Friday. That's right, good old fake number day. I think you're going to enjoy what I have to say there. We're going to be talking about quite a few things. We're not riding today. Too many batteries to charge. The one for the pole and the one for the gears that has to run a Wi-Fi. You want a half decent bike, you now need to run Wi-Fi, gear changing and pole changing. And of course, in charging the two of them with one charger, I lost one of the batteries just moving from the bike to the house. How I did it, I don't know. But that means we're on Shanks's pony today. Shanks's pony, which is requires less Wi-Fi and batteries. And you know, I kind of like that. I kind of like simplicity. I kind of miss simplicity. In fact, I tweeted out today a bit of a meme picture, but it did encapsulate something I remember. Sometimes I wish it was back like when I didn't know what the world was truly like. Because now that I know what the world is truly like, we're on perpetual alert for the Bolshevik totalitarian creeping captures and their agenda. Yep, we are. So I'm going to go walk and talk with you. We're going to try and get some nice seaside in there to make it interesting for you. Slower pace. Less chance, I hope, of seeing me wipe out. So what happened on fake number day? Fake number day is our live trading day. We had live trading day and we saw the number in, and you see, it suits the agenda for a bit of truth to start getting out. We've had artificially inflated numbers when they wanted to deny the fact that it was a recession. Under Biden, we continued to get incredible numbers that defied belief. You've never had such a strong economy. Look at this employment, they said. There can't be a recession, even though you met the criteria for a recession, because employment. Great job numbers. Then, of course, we discovered, as we told you at the very beginning, that all their numbers are lies. At the end of empire, everything is a lie. There's entire management of what you're supposed to think, not truth. That's right. You get managed as to what you're supposed to think, but not what you should think. It's quite rocky terrain here, so we'll be having to look forward as well. But I'll try swing the aspect around a little bit for you as well. And here's what happened. They're now allowing some of the real truth to get out. So, for those that say, oh, we're only inflationists and we're wrong. We've been saying for the last 3 years, the economy is bouncing in and out of recession and is in deep trouble. For those that say we're deflationists, we've been saying that the underlying reporting of inflation is well below the true rates and giving plenty of anecdotes for that. And here's where we lose a lot of people. They can't see two things being true at the same time. They can't see two things existing that actually on the surface seem diametrically opposed to each other, existing at the same time. Especially when you have a two-tier justice system, two-tier economic system, two-tier enforcement system, two-tier political system, two-tier rights system, such as immigrants getting priority, just one in a court, by the way, in UK, automatic priority for immigrants on the housing over indigenous people who have been paying tax, or their families who have been paying tax in the country for centuries. Anyway, these things can both be happening. What is actually happening is the cost of living is going up disproportionately quick compared to what you're being told. We're going skating already. It's stony and steep. And at the same time, income and job markets is bad. Income increases are low and job markets are tight to the point of terrible. I saw a lady who is a recruiter. I think it was the life sciences she was talking about. I tweeted it out. If you're following on the Market Sniper, you'll see it. Saying she got 600 applications, all meeting the criteria in the life sciences job offer they made. She said she had to do a quick eliminate to thrash down those that didn't have the criteria, the base criteria, because there's a lot of people that are desperate and they'll try it on. Hey, life sciences sound nice. Not too sure I know what it means, but hey, I'll work real hard and put a whole bunch of effort in. No, these were all people that met the criteria for the CV that they'd off and had the high standard, that had a lot of points that you had to surpass that to prove that you knew XYZ, bits of paper you should have collected along the way in the life sciences field. She had 600. She came to the conclusion that virtually all 600 were merit-worthy. Enjoy the cliffs. They keep reshaping. I don't plan to be part of that reshaping. Let's hope we don't have an earthquake. And with that said, she said she gave one example, and of course it's for her industry, but I think it's symptomatic of the job lot, is that the recruitment market in her industry is dire. There's so many qualified people looking, and there's so little available that it's overwhelm if they post a job. It's absolute overwhelm. Now you can say, well, that might just be the life sciences. But I've got anecdotes for you across the board on all things by the thousands. It's a Sunday stroll I'm taking. You'll probably be seeing this maybe Monday, possibly Tuesday, subject to editing speed. So you are actually in a job market recession for the everyday people, including smart people, qualified people, but not the insiders, the deep insider cartel. You are in that recession, and that's how all the capital and the money, the government has crowded out the private sector in terms of expenditure. And you're sitting in a situation where retail, and there's a consumer and retail recession, for sure, in and out all the time. And at the same time, the non-farmer number, let's get back to that, was 22K on an expected 75, which is a chronic miss. And guess who went up in value? George Gammon will tell you the long end of the bond market had a pullback, because it did. The smart people will tell you gold. Gold went up to a brand new high, 3580, 3590. Let's deal with George's take. George's take is, and this is, I'm going to do the in quotes mock sincerity type vibe. The narrative goes that the long end is being lost out of control and nobody wants to buy US treasuries. The reality, and he has a hand pointing down, and he shows a fairly short time frame chart on the 10-year US yield, where the rate's actually coming down. And my first reaction is, hey George, you've just had an outlier miss on the NFP, which is going to trigger a certain kind of reaction for sure on one day. But why have you got such a short time frame chart? Why don't you include from 2020 to today and tell us about that amazing demand for treasuries? Because the truth of the matter is, people will come out on those tactical moment days and say, look, long end yield go down. And they'll forget that it's spent the last 5 years since 2020, around this time. It's 5 years ago we made the call, by the way. It's our anniversary of short debt call. A warning that rates would go higher. At the time, 5 years ago, you'd recently touched the low on that same 10-year of 0.39%. 0.39%. That's how cheap borrowing was. Because they just locked down the entire planet, scared the bejesus into you about a flu which disappeared, but this new named version showed up. You ended up having zero flu that year, but you had this new thing, and it was a rebrand. It was called CV-19 or COVID. And everyone went from saying, I got flu, to saying I got COVID. In a way, it's not entirely wrong. It was a nasty little version of flu. So, 5 years ago today, at that point it was no longer 0.39 as it started to come up. 5 years ago today, when it was about, it was already in the twos, I would imagine, by September. I'll have to check, don't quote me on this. But the market had snapped back quite violently on the rates. But of course everyone expected it because it got super low. They were thinking this is all just reaction for now. No one was talking about the bond markets. Nobody. It was all just reaction, they thought. But it kept coming. Hello, my lovelies. He doesn't really love you like I would. They kept coming. They kept coming. And they kept coming. And then we started to get upside HVFs, setups. And we started to make our calls. In fact, the low, what way down, the low was way down in March. By the time we made the call in September, the rates had moved substantially from 0.39% on the 10-year. Since then, regardless what George tells you directly after a single non-farm payrolls, we've gone to the doorstep and put a foot over a number of times the 5% mark. And yeah, you might be 4.8 now. You might drop to 4.6, 4.7. You might drop a tiny bit more. But here's the problem. To get the 0.39% that they got, here's what they had to do. They had to kill the consumer entirely. The consumer had to be killed entirely. They shut his business down. They sent his waiters home. They closed his restaurant till. They made him put big empty spaces between tables. That meant he went from a 100-seater to a 40-seater. They did all these things. And then they told you couldn't go out. The only safe place to buy was Amazon.com, where we are taking the news. Actually ran advert for Amazon. This is the amazing thing, where you understand the corporatocracy, the corporate fascism, and the cooperation that goes with government. The mainstream media in the United Kingdom, everywhere I was. Amazingly, Amazon has got a checkout. Your parcels will arrive without contamination. All workers are masked. We are doing the following, the XYZ. That was news. That was on the news, like you'd watch. Here comes the BBC, the late news at 10 o'clock. In startling new news, our corporate partner, Amazon.com, will be able to dispatch parcels to you without any risk of contagion and virus spreading. That's fascinating, you know? So you actually had the mainstream media running core advertiser for a megacorp while shutting your business that could have sold some of the same items that Amazon gets to crush. They did a market share ramp and a training for online buying and also for stay at home. You see, that's what the 15-minute cities are all about. Stay at home. Have a small little walking loop of influence. your local chippy and pizza, your mate down the road, and back home. Everything else can be delivered. It was training for the 15-minute siege. It was training that you should only spend at Rockefeller One World Retail Company, Amazon.com, and all the others. That's what they did. And they did all of that, and they slaughtered small business. They sacrificed small business for big business. And they subsidized big business immensely. They, of course, made pharma specifically very rich, which Bill Gates just happened to have invested heavily in just before. All those things happened. And during this time, rates went from 0.39 to 5%. But George is telling you there is a lively market of investors all over, desperate to buy their way in to the long-term treasury market. Take my money, I must have a bill. No, stand in the queue, Me. All right, please can I have that next 100 billion? Yeah, because you went from, and you've tapped out very close to these fives and just through the fives. You traded through 4.8 on a non-farm number that confirms the original things we were telling everybody when no one believed us. That the Fed was lying to you, that it was a red-hot economy. Just like we told you they were lying to you when the inflation part came and they said it was transitory. We said there's permanent inflation and it's been here for a long while and it's being understated. And 3 years ago, we were saying you're in a deep recession. I also sell things. I also have clients on that very point. We do payments. We're doing more payment business. Why? Because people don't pay up front. It's fine by me. It's all good. It barely costs too much more. It's a tiny smidge more. And you can take the hit over 3 months. And if you're doing things right, like investing in gold, taking our HVFs in gold, you might be able to pay it off sooner than you think. And we can see that as somebody who trades in business, what people's choices are. It's like a small poll. It's like a ADP. Farm. It's like a pre-non-farm data. A small poll of where people are at. And people aren't flying. Here's the news. People aren't flying. Let's go up. Taking myself into a dead end of pebbles, yeah? I have this unhealthy concern that certain kind of person relieves themselves unnecessarily vastly in those bushes there from previous visits. It's not going to be sightly for YouTube. Anyway, so forget that. There's evidence that the Treasury is actually buying some of the long bonds to try manage the disorderly increase on the long end. Yeah, there's evidence that people are attempting to mask. That is a manipulation. 0.3, even if you take it just to 4.5%, is a massive loss in value. So, they'll tell you that deficits are going to cause trouble for America. They are causing trouble for America, George. Why do you think Trump's running around doing all these deals? We need to talk about Trump and all the tech honchos dinner, which we'll also do, and why I think that was. Because, friends, deficits matter. Because if you're producing nothing apart from T-bills and dollars, playing the trip and dilemma game, and people suddenly lost their appetite for that output, you start to have a problem when you need their stuff and they don't need yours. That's when the Sassoons came up with selling opium to the Chinese, of course married into the Rothschild family, both being chosen ones, merged their great interests of the pan-European UK banking cartel with the local jury's drug-running mercantilism, then got the British government to send troops to enforce the right that Britain had, not Britain, the Dutch East India Company, etc., legacy families' right to sell drugs and make the profits. And of course they use British bodies, British ships, in the name of empire through a throne that they control via usury lending, the mercantilists. So, that's how the world works. That's how the world works. That's where we're at. Trade deficits matter. It's interesting to see how the fentanyl crisis in the US is being framed as a Chinese endeavor. It's never a Chinese endeavor. It's the same people who do the drug selling all the time that are making the profits at the very top. They always want, and this Buffett and Charlie Munger regularly mentioned, as part of his reason when he was very aggressive tobacco company investor, is you want to own the only bridge to the other side. You're talking about a monopolist, not a capitalist. And you want addicts for clients. That sounds like somebody understood the mercantilist Ashkenazi pretty well and aspired to become one. They don't sound like the good guys, Charlie Munger and Buffett, to me. They should say you never met your heroes. When I was younger and I heard about all this Buffett, what a investor, that was a wow for me. I read all the books, Snowball this, etc., all the stories and narratives. That's a Cypress Ferrari right there. Very popular. About that same condition. Yep. Trade deficits matter. Otherwise, the drug peddling needs to come out. And of course, no one makes more money than drug dealers on the margin of that. Because they have it made illegal. That means you have to run a black market network, which just allows you to pump the prices much more. And you have an addicted client who'll steal he'll shoot his grandma for the pennies in her handbag. You actually turn people into drones and helpless robots, which is kind of the agenda. It's what they want. That's why they're coming to put a chip in your head with Neuralink and Elon. They want you as a drone. They want to destroy your sense of spirit. Let's be clear. A man or woman deeply depraved in the grip of a heroin withdrawal has no personal spirit or humanity that they can appeal to at that point in time. They just have a biological urge that is overwhelming, very dominant, and ready to steal their soul, in a sense that there is no thing they do that the morality thereof matters. They love those kind of clients. Then you commit the crime. They're always one leg indirectly associated. They never pull the trigger. They put the round up the chamber, hand you the firearm, give you your downiest days, give you a pump and then a dump, and you wake up with that depression and you do the deed for them. And they say, isn't that sad? Anyway, wasn't me. I'll collect his goods. That's what you're dealing with. So trade deficits, George says deficits, all the official narratives are that these record deficits of America and no one wants to buy treasuries, all this stuff, which is the actual narrative. If you're following me on Twitter, have a look at it. I'll give it a retweet as well after this recording. And nobody wants America's debt. And then reality. On one day, where, let's be clear, it's not news to me that America's in recession. I wouldn't have shut the bed and suddenly bought bonds. But they have a banking cartel that say, okay guys, we're going to give you the data. Here's how it's meant to be interpreted. You've got to create some momentum in bonds here. Go, go, go. The number's out. There you go. Go, go, go. Oh my God, we're in recession. Oh my God, America's in recession. Of course you're in recession, and it's not even new news. You've been in recession for quite a while, and it's been getting worse, and we've been telling you. We are the news before the news. We'll keep telling you that too, because we believe that. But you're also in inflation, and they can exist at the same time. They say, everyone thinks it's binary. One comes out the closet, the other one has to go in. Then it pivots, you know? No, they're both existing continually, but the net effect of one will sometimes dominate the news flow more than the other. You've had peak inflation. You've had Fed act all tough and hold back on rate cuts. That sets up the next leg, which is now everyone will be talking about recession and deflation. It's going to be a hard time for me on my inflation thing. I know it already. And the more jobs get lost, and the lower they have to, they don't need to, the lower salaries they can get away with paying because they're getting 600 applicants per job, the more your living standard goes down because you'll be paid less on that next job and your dollar will have devalued more and your cost of living will still have climbed. So New York strip beef, boneless. It's got a very specific name. I shared the inflation meme with the guy holding the gun on the other guy, kind of Simpsons-esque type drawing. Go on, tell him inflation's only 2.7%, and he's got a gun at his liver from behind. And then it has the boneless New York strip steak from 16 months ago. So 24 April to September today. Percentage up per pound. It doesn't matter that the weights were slightly different. You see the price per pound. 16 months ago, $10.99 per pound. Today, $15.99. $5 up. So you've gone from 16. You've gone from 11 to 16 if you take the trickery numbers, that little old chosen one trick of double nines to make a number sound less. Yep, there's psychology to that too. Don't worry, they now use 7, ending in 7 on big products. All sorts of psychology. But anyway, don't need to get into that. I'm sweating because I'm in my cycling shirts with long sleeves. Should have come in a vest, but then I would have looked a little bit gangster. So you're with Captain Thor here, hero of the great hammer, and I'm wanting to hammer some points home with you. So, whilst inflation continues to simmer rather well, at the very same time, everything's going to be talked about disinflationing. They need you in the paradigm that you don't see both existing and being true. For example, I watched the rugby match. New Zealand against New Zealand against South Africa. The All Blacks at Eden Park, where they have to maintain their mystique of not being defeated there, and the Springboks. 2 points can be true. The ref was pants, can be true. Typical of Springbok fans, I'm told. But at the same time, the All Blacks executed far better than the Springboks. True. 100% true. And congratulations to them, by the way. If you're a Kiwi, thumbs up the video. You deserved it. Great game. 2 things can be true. One might sound like it's trying to cover for the other. They're both true. It wasn't perfect symmetry in the officiating, but at the same time, one was executing. Every time they got into the 22, they scored, and the other loads of times without. So, inflation will continue to exist, even though you're going to just hear about deflation, because the next phase will be the inflation. You have to understand. And actually, what they're going to do now, by rate cutting on on the Fed, assuming that goes ahead in September, is exactly what will help ensure that at some point in the future, inflation will be the net dominant one, and you'll all be talking about inflation. And it goes a lot higher. And no, it was never a true 2.7 or a 2.4 or even a 2. But there's influencers, people on YouTube that are talking, and they will tell you the following. Inflation's not only at 2%, never mind 2.7, it's going lower. In fact, it's undershooting. The Fed was late. They failed to see the recession. And that's a popular meme. I'm smarter than the Fed. We've been in that camp often. You know, let's take a walk through a field here, shall we? I don't want to walk and talk past families and people that think I'm a nut job for talking to a stick. The Fed generally has always lagged. This time is different for a couple of reasons. I remember calling them out for lagging in 2009. I was in the property market. I saw it firsthand. They're not cutting. To suddenly realizing this was really big shit and cutting so late. Mervyn King it was in the United Kingdom. The UK lads who remember the big authority, raised brow. You know, they built him up to be this smart, old, wise owl. He was just a top cunt like all the other pedophiles. But they created this. Oh, he said that. That sounded stupid. Mervyn King would have raised his eyebrow about that one. You know, like, boo, boo. Oh, the big god he's just twitched in our direction with a slightly disapproving look. Oh, how in fear we should be. You know, all of this grandiose posturing of mastermindliness. He was so fucking late on cutting. I said it's a full-blown crisis. By the time it got to Lehman, he started to realize there was a full-blown crisis. He was about a year behind my calls. And as part of that process, he then overreacted to the downside. But such was the full-blown nature of that, call it a depression, that you didn't fix it because you were so late. You kept piling on the pain and not realizing how big a thing it was. That's what happened. That's why they then had to do QE 1, 2, and 3, which of course added to the debt of all the major nations and is leading to the fact that we find ourselves here. And that's why I say it's active intent to be late. Mervyn King didn't make the decision. They want you to think he's your grand old smart man making all the decisions. His handlers did. Probably Lord Levy, although that was Tony Blair, but, you know, a similar surname. Because they need to make sure that you properly pump it and properly damn dump it. And that requires central bankers to be late by intent. You want a recession to gain some serious momentum, baby. You keep those rates, you keep squeezing their nuts. So people will say, because we've also pointed out the inflation side, that we're not seeing the weakness in the economy. We were the first to see it. None of those people talk about a recession being a recession when you met the criteria of a recession. We're still the only person that says, hey, you met the criteria of a recession in 22. You just let Granny Yoda Yellen and the fucking Biden regime with their inversion perversion arm of the agenda. Now you've got the Zionist Trump with the Peter Thiel Palantir version of the agenda. You know, you bounce from the social cultural Marxists into the genocide supporting big statist satellite grid of control. I mean, you do realize we're in a ping pong bat from the red bat to the blue bat and just being slowly worked up, bouncing off all the sides to, in the sky, your Bolshevik total communistic dictatorship brought to you by the corporate Zionist fascist political system that ends in Marxism for you. corporate fascism. And I want to touch on that because now I said when I mentioned Trump that while China and Russia and India were making great strides in grabbing news, Trump, our chosen one, who's also in the Epstein list, also being part of the molesters, never to release the real list, apart from being on it himself, despite what he promised you, never gave you the truth on 9/11, despite what he promised you last time. Such weak-ass damn squid disclosures. Yeah, no, the Saudis also did some stuff. But the Saudis are your main allies. Why aren't we bombing them? We bombed Iraq. Anyway, leave that one. I'll go on another rant if I go down that one. So, Trump had Zuck, Shillgates, the poisoned them to death, King, the controlled brat, Ziobrat Media, Zuck, and his pals, Schmoogle, and all of these, you know, it was almost like a declaration, a big swinging dicks conference where Trump was presiding as king. You know, I do come down, yeah, it's quite nice. You have to hit that turn pretty hard. This is not the steepest part. There's one that's a bit steeper and shorter. On the bike, this will be fun to do together. Maybe next time. Now I'm walking around like a Zulu warrior with his letter on the end of a assegai, delivering my note. It's how messages used to be delivered in some parts of Kenya and Africa. A letter on a stick. So, all these, the big swinging dicks of tech, all in the room, making little chit-chats. Well, what's happened? You see, the problem is, you've got mega cap, fascist corporate statist entities, unicorns, that they'll tell you all were just birthed in an amazing Californian basement or garage, that are all incredibly trillion market caps, big old earnings, not paying their taxes either, cheating other nations as well on that front. In the UK, those companies tend to pay less than 1%. They pay 0 point something in total revenues. It's an absolute farce. I can remember it being kicked around when I was there. But of course, they don't have to pay tax because they want a super dominant currency, which is their share price. Any technology they don't own that is better than theirs, they can buy, either bury it or steal it. And you don't even need to pay. You just issue some hyper-valued shares and you use shares for the acquisition. Anyway, back to Trump and his dinner with jerks. What's been happening recently is they've been dealing with tariffs in a certain kind of way. The government, which is bankrupt, the Treasury bankrupt, the Fed is bankrupt, and on this other hand, they have these hyper-valued tech companies that they created and seeded, and given lots of government contracts too. Your tax money is paying for your surveillance grid, as you know, to imprison you. Government has given it to tech companies. In exchange, they get to trade that fact. Dudes on the bikes are out. I'm going to do one of these on my 500, by the way, dirt bike as well. And I will have the lapel mic so it's not all drowned out by the motor. Should be good audio. We'll go a bit faster than today. A bit quicker than Shank's pony. So, what they've been doing is, they're not ready for the big collapse yet. I don't think it's far away, but they're not ready. So what do? You shore up government's balance sheets with the super rich megacorps that you help make. This is why I say it's fascism. It's a combination of a Zionist government and fascist corporatism that is being used and weaponized against the people. None of these make it convenient for you companies that give you devices without the ability to remove the batteries, that listen to you. None of these firms are your friends. They're undermining you. For the government and the statist departments that weren't allowed to exist by law just got privatized. It's called Palantir. That's what's happening. And so to shore up the failing government and its finances, the government is going to look like it's a great negotiator. The whole narrative, by the way, on all things is, yay, Trump, stick to the plan. Trump's winning back. Equity for the American people. You know? No. The money's all being crowded into one part of the statist machine, the unicorns, and everything else is so skint it's ready to fall over. And if you're not ready, you need to move some of that money back from the corporate fascist attack vector of Facebook, Meta, of Microsoft, of you know them all, Amazon. Bezos's dad, by the way, worked in DARPA. Think about that for a minute. Bezos's dad worked in DARPA. And there we go. He's running the military industrial complex's servers for a large part of their needs. Interesting. Chosen one. Gets to scoot about in $100 million yachts. Live a grand old lifestyle. Keep marrying hopeless porn stars with quadruple Z plastic tits. Talk about the cliche right there. But anyway, so they're going to position, this is my prediction in terms of this Trump dinner. What's it all about? Because we've talked around the point a lot. What am I saying? Well, you already saw some of it with Intel. America has a stake in the future profitability of Intel. They've secured 5%, 10%, whatever. All that means is the other shareholders are getting diluted, and government needs to build some assets in its holdings so that people, peeping Tom, peeping four and his peeping hammer. Hello, me lovelies. Anything interesting apart from crusty old men? No, nothing much down there, guys. No titillation for you today. So he's going to secure for you stakes in this company in the name of being a brilliant negotiator. His initiative. Trump brought everyone together. Trump said it's time for us, for the greatness of America, to be in this together. Build back better. We are one. If America doesn't survive, tech unicorns can't survive. I told them straight. It's time. It's time you did your bit. Well, of course, because they nurtured these unicorns, yet you're not paying tax in a meaningful level on their foreign earnings. Precious little to foreign governments. They kept throwing government contracts at them and making them what they were. It's a DARPA, CIA, Mossad megacorp. I was sitting here with the big Israeli not too far away, and I was hearing the word 10, 15 years ago, before it was on zero hedge even, Israelis are being told to buy Apple. This was when it was still a 500 billion corporation. Well, nowhere near. It had to double to get to $1 trillion. We were still waiting for that full trillion market cap break. It's even possibly a bit before. Well, I don't know where Apple was trading 15 and whether was it even 20 years ago. I can't remember. That was 20 years a bit far back. I haven't been here that long. But I remember hearing about it. And I said, given the sources, I wouldn't be surprised. This is very much like the warning not to go to work on 9/11 that only certain people got. Just kind of the investment advice that only certain people get. Oh, it's a big fall. And in hindsight, I should have jumped on it. But I didn't, and I'm not claiming to. You see, some people get the nod if they're in the club. Sayanim. Most Israelis are unpaid agents for Israel. It's called Sanyanim. Mossad recruits them or contacts them, and they'll always help them. Maybe get a car rental on the tube without too much paperwork if they're ever doing some dirty deeds in town. Maybe give them cheap access to something, again, without too much bureaucracy or questioning. They're all over the world. They have a network and agency all over the world, an unpaid agency that does favors. And if you do favors for the great Israel and your club, your Zio club, you get told what shares to buy and what to leave and how long to leave them for by the insiders. And the insiders know. How do they know? Tim Cook, who came in, is a useless. So let's be clear. Apple's probably gone up 10x since he came in. And in spite of that, in terms of what Jobs cultivated, who was also an asset, by the way, but let's park that for a moment. Jobs always said, build the enterprise, build the products, keep innovating, keep adding, build the products and the assets that are leaders. Tim Cook was a procurement guy. He just rode the momentum that Jobs established. And actually, I would say Apple is losing ground. They're now buying back stock. They're doing all the financial engineering. If you told me, Steve Jobs, keep this money and develop new products and new innovations, Apple's missed the AI thing completely. Steve Jobs would not have tolerated not being a leader in any coming technology. Tim Cook, procurement guy, had a bunch of financial and accounts people, managed costs down. You know, the iPhone 9 looks like the iPhone 10, that looks like the iPhone 11, that'll look like whatever, the iPhone X, a little bit more bigger pixels on the phone. Complete incrementalism. There's no wow anymore. There's no leadership. It's just cash cowing. There's a nice chair in the shade. I wouldn't mind a sit down, actually. I'll sit down. We'll chew the fat under the tree. Just make sure no puff adders are around. So we have a lot of cats on this island because of originally having a lot of snakes. I'm not sure it'll hold. What do you think of my chair? The quality might be lacking. But you know what? Beggars can't be choosers. So here we are. Someplace at the end of the world, talking about Tim Cook being the procurement guy and running the innovation history and legacy of Apple down. Don't forget, he did the music on disc instead of Sony Walkmans. He then did the phone with touchscreen. He did so much innovating, and he was the innovator. Cook is like an accountant. And the people he's put in charge are like accountants. But anyway, we don't have to talk about Apple too much. It's not like I recommend Apple stock as a buy or a sell either way. With inflation times, they push prices up. The market had to take it. But eventually, in this downturn that you're going to hear a lot about, the market will stop taking it. And the phones will start to get older. The renewal cycle will slow down. People's abilities to buy lots of shitty minutes, especially with Wi-Fi, will go down. Mobile contracts will have to, in real terms, mark my words. Basically, there's very few things I see going down in nominal terms. That's because of that same inflation I told you about. I'm trying to destroy my commie hat as much as possible, sweating like a dog walking in the sun. And he's getting all these tech guys together to shore up the balance sheet of America. But it's not like it's great negotiation. They all know they were seeded by Dark State, and Dark State needs government to survive for a while. So there's a layer above Trump that controls both Zuck, Bezos, Gates, and every other one of these psychopathic Bolshevik corporate fascist leaders that have handlers and are the front men. Remember, the real wealth doesn't want you even to know its name or to know what its face is. These are front men that get to be called. Yes, they live a grand life. They won't be driving around in shit cars. They won't not have a yacht. But they're still front men. Because if some loon got kind of angry and wanted to shoot a few of them, he'll shoot Zuck, Gates. I'm not personally making a recommendation here, I hurry to add. The people that are behind them don't want to be known. They don't want to be in the front line of being fired upon. And those are the people that are actually controlling them. Those are the real dangers. Who do you think's giving Gates this agenda? If you're so wealthy as Gates, why have you got this messiah complex that wants to save the world from things that are actually not a problem, for which your solutions represent a massive problem? Just be rich, go live, climb mountains, go on tours, help a few things that really work in an honest way, save a few dogs, build decent kennels. But no, it has to be the pharmaceutical attack vector. It's agenda driven because they're controlled and they are inherently evil. You can look in Gates's eyes and know there is soullessness in him. He will be very happy, and it will be a manifestation of him and his friends' plans and the people that handle him when the population is significantly lower. And half the time it creeps out by accident when he's talking. It's called a Freudian slip. So back to the economy. That's how you'll shore up the US government for a while. They'll start to take value out of this tech stock market. They'll say, well, we own 5% of Intel. We own X% in Facebook. We do this, are valued at that. They'll start to steal a bit back of the value they need. And this will be sold to you by the cigars, guns, and goat shaggers as stick to the plan. Trump's working for us. Look at this. He's negotiated stakes in all these corporations. America's getting some of its wealth back. No, it's not. It's shoring up finances on the weakest part of the chain until we're ready for the all fall down. Ring a rosies, a pocket full of posies, we all fall down. That's how it goes. Thank God the sun's gone down a bit. Lost half a litre in this little stroll. But it's been fun. How are you enjoying the views? Hit the like button if you like a cliff edge walk with Thor, the peeping Tom. There's nothing to peek down here and see, I'm afraid, apart from a grisly death in the good old Mediterranean Sea. Yep. So back to those that claim a great victory for treasuries. A couple of things have happened. Central banks are holding more in value in gold than T-bills. And the chart for gold goes like rounded bottom and up. And the blue line for treasuries goes like that. Many of you will have seen it if you follow us on X under the Market Sniper. Also, what happened? How about this? You see, Tether was investing in treasuries. Everybody thinks this is the master plan that's going to save them. I can tell you, Tether's buying is very small right now. So it would have to suddenly get extremely huge. That doesn't rule out that that can't happen. I'm not saying it is, but in terms of significance, it's whatever, 15th on the list. It's very small. So other treasury news, 550 billion was issued in new debt. That thing George says is so much in demand. Well, the supply side sure looks meaty. Meaty. 550 in 30 days. Annualize that, 6.6 trillion. 100 billion of it on 4-week notes. 4-week duration notes. You put out 100 billion on 4-week duration notes. To be clear, you return pay that 100 billion in 4 weeks' time. It's kind of in the name. Plus interest during that 4 weeks, which will certainly be lower than what it is on a 30-year, a 20-year, and a 10. But then you have the problem back again, and that's without new borrowing. I did an earlier live stream, and we spoke about the hamster walking on one massive 10-meter diameter wheel that is slowly ticking along, like the second hand on a clock, you know, strolling and staying on the bottom, those massive wheels. And for the same calories burnt and activity, we put him on a 5-centimeter wheel, and his body's taking up a third of the perimeter, and he's having to run and the wheel's spinning at a massive rate. You run out of space far faster on the short end, because everything you roll, everything you put out rolls back at you real quick. So whilst you might have got a lower interest rate for a segment, you now have to keep rolling it. So imagine how quick the short end gets saturated when all new issuances is all being moved to the short end. They are desperate now to let the news of a recession get out. And here's the thing George is missing. They desperately need the news of a recession to get out to try and get better rates. They're not going to get as much as they like. You're not going to put the genie back in the bottle in terms of the debt market turned in 2020, 5 years ago today. That's when we called it, guys. We're celebrating it. 5 years from our call. 1 year since Paul Tudor Jones and Druckenmiller called it. 2 months since Luke Groman called it. Or 1 month, 2 months on zero hedge. This guy nails it with his call. Substitution. Substitution of debt for gold. No, can't be. Well, that was the trade. And we even warned you energies wouldn't be performing well. How do you think energies are going to perform in a recession? Now that it's the dominant theme over inflation. You think your oil's going back up to $100? Or do you think it's going to lower 60s and possibly lower? I know where I'd be placing my bets. I know where I'd be placing our bets. And I'll be saying, we told you so. Not all commodities are the same. Some are reserve assets for measure at a time that the phony reserve assets are failing. That was your trade. Gold miners, gold and silver, that is your trade. Those that done long oil and natural gas have had frustration. We provoked the uranium guys at some point after it had quite a big move by saying, I wouldn't go and expect too much more here because we're in a recession. That was 3 or 4 years ago when it was peak uranium to the moon. It had already moved quite far. It was having a consolidation. I prefer it to oil. I do think we're going back to it. It's the least bad of the energies, but it's not. Energies is not the place. And now they're going to let the recession theme run that we've been telling you was the fact since you met the recession. We were even saying it before they officially met recession. We said we told you so when they actually met recession. Then they try to recant the recession. We said don't buy it. So you are in recession, but during that period you're in recession, you're also in inflation. Cost of living has continually gone up over the last 4 years. That is proof that you can be in an employment recession, a consumer recession, and in inflation simultaneously. The girl that did, the mother that did the Walmart shopping list, like for like goods, from 2020, that she checked out. She had the history in her website. She put the identical items in and got 134%. 5 years later, 2.4 times. Call it 2.3 times. Let me not round up. Let me round down. 2.3 times in 5 years. Wow. That's inflation. But during those 5 years, especially the last 3, you're in recession. Predominant too. So that's the thing. And that's called, it's got a name. It's called stagflation. And when you have a real bad version of it, we made up a word. Others have made it up too. Because like I say, when I looked to create the YouTube channel in 2009, when I was starting my oath, it already existed. Someone else had done it. He posted for a year and then left it. So someone had the same idea. And there's possibly more. But nonetheless, we came of it on our own accord, and we keep mentioning it. You are facing, or we could have said mega, but it doesn't make sense. Hyper, because you get hyperinflation, and that's not our call. It's hyper stagflation, which means an extreme version of the combination of both negative or low growth and high cost of living creeping up. And that, my friends, is the worst environment for debt markets. No matter how a 10-year T-bill reacts to a recession call, that will be that T-bill's best moment on a non-farm payroll when you miss a number, not even doing 1/3 of the expectation. What do you expect? The shock and awe and the banker system saying, yes, we must drive people into bonds. Come on, buy the bonds, drop the rates. Good luck with the follow through on that. All the way down to 0.39%. It ain't happening. It ain't going there. It ain't going to 1%. It isn't going to 2. It isn't going to 3. I'd be very shocked if it went to 4, low into the 4s even. It could go low 4s. But especially on the long, if I go up to the 30-year, good luck. Good luck driving the 30-year below 4%. In the environment that people's ongoing cost of living keeps going up and up. Good luck. Good luck being a bond bull post the 40-year bond market turn. You need to have ball eyes to keeping tongue on those people down there. I think everyone's getting up and going home. They've bucked ballas and boobies enough now. We're going to strap up and head off. And you have to stay the trade. There's people that will shake you out of your gold holding. Oh, gold is the bubble. Let me warn you of a couple of things about being a gold holder, though. You're going to be reframed as the bad guys. This is an absolute certainty. I already mentioned Lagarde with her statements. The gold bubble is undermining the financial system. That's a shot across the bows for what you should be expecting. Lowell's Finkelstein had something else similarly to say. Gold could hurt capital markets. Gold's bubble could hurt capital markets. So I started to mention Tether, and then I didn't follow through properly on that. Tether wants to buy gold miners. They don't even just want to go to the metals. I always said when they went treasuries, I thought they're doing that to get in with the Fed and to be tolerated until they're controlled and fully bought in. Assuming they weren't born that way from inception. You see, they probably just act like they were enemies for a while. But maybe it was organic, who knows. But they took on T-bills as their collateral. Because that would make them tolerable. See, via of T-bills gets you a lot of political good grace. You're supporting the Ponzi. All the slave nations to the US, Japan, and the United Kingdom have been buyers. Belgium and the Cayman Islands, buyers. Luxembourg, that's basically Europe, maintaining the Ponzi because they need the American money in NATO, which is now not coming to the same degree as before. But going back to Tether, Tether now talks buying gold mine. They're not even talking about going to gold, going straight to the miners. Everybody's realizing at the same time now that is way too underrated, and there's been huge inflows into GDX, GDXJ, and other ETFs. Don't buy the ETFs, buy the metal. If you want to buy the companies, get issued the certificates. Don't accept anything less. Big warning to you all. So they're going to buy gold miner. Why would they want to do that? Because their treasury idea was a good idea politically, was a terrible idea financially. If you're building collateral, why would you? They started, it was 2020, literally as we were calling the top on bonds. It's our 5-year anniversary for Bitfinex and the Tether that was having to change banks all the time and being pursued by the SEC and Tether this, Tether that, it's bad and evil. It was the biggest stable coin, suddenly got cleansed, got laundered, and no longer was a problem. From when it said, okay, what do we have to do to stop being persecuted? Okay, buy treasuries, we'll buy treasuries. And we were like, how ironic. I remember that. They're going to turn to buying treasuries at the top of a 40-year fucking bull market. Well, they found out how that worked out for collateral. By the way, Tether is minting money hand over fist in terms of its costs, one side. But boy, they're shit investors. If they'd gone straight to gold, and were pivoting now to gold miners, it would make much more sense. And they wouldn't have to, they would stop having to buy collateral. They could just pocket all the fees. Literally, people could give them their fiat. And if they bought the right things, the stuff they bought would go up more. Then the new fiat they were getting, they wouldn't even have to back it. The appreciation.
in the gold miners and the gold assets. So soon, you're going to get a CBDC, which will in fact be Tether,
which will be backed by a mix of treasuries, gold, miners, and other assets that people believe in.
You see, for Tether to become mass market accepted,
you need to believe there's something real backing it. And treasuries never excited me. I said, well, good luck with that one.
When they lost 55%, they would have had to put twice as much money than they received into new treasuries just to hold one-to-one backing. If they got all 100% treasuries, those treasuries lost 55% to the bottom of the market. They're still over 50% down. In 2020, when that change came. 2020 was such a key year.
On market turn, of course it was, with the CV19 trick. That's when they broke everything and everything turned.
And that was when Tether decided to buy treasuries at the top of the bull market for 40 years. A 40-year bull market, not a 5-year, 3-year.
They didn't get a small cycle lot.
They cooked up the macro cycle.
So they haven't been that well backed.
But then the SEC maybe doesn't look so close anymore now that they buy as a treasuries.
Their collateral halved. Think of the banks.
Bank of America bought 500 billion. Right about 20 quid. That must be worth. Oh, it's accepted as collateral, but it's lost its value. Are they going to accept that collateral at what it was bought at, or what its mark-to-market value is? All these questions don't get answered properly. We don't ever get to hear the bull. Shoot. As I sit here on my perch, I'm always tempted to grow stone and watch it bounce all the way down. I actually have a little bit of a fox that lives on this cliff edge. Some nearby. We see him occasionally. Wow. Roaming the edges here. Especially at night when you come back on the road. Yep. So they lie. And people take non-farm payroll day when they make it official that there's a recession as a proof of point that there is this huge wall of demand for treasuries that lost 50% of their value. Don't buy it. Stay gold. Stay gold. Don't wait for the 40% discounts day. Because the people that were talking about 40% discount day, when they were saying it originally, gold would have had to drop to the 890s level. They keep saying it. That's the thing with these forecasters. They keep saying until at some point, generally, everybody will see them as being correct. And no one ever calls them out. But you've been saying that for 10 years and it hasn't happened. Well, for gold to get down to 890 on a 40% collapse, that would have been in around when it was about 1600. You missed it. You would have been shaken out of your gold at 1600. That means the value at 3.5, you've all missed. You've missed 2,000. You've missed $2,000 of upside. $2,000 per ounce. Think about that. If you were waiting for that 890 entry point when it was $1,600. But those people are still saying that. So now at 3.6, because it's almost traded 3.6, it's 3.5, 80s and 90s. I think it will soften. We're going to have a bit of a coiling period. I think you're going to go sideways and soft for maybe a few days, possibly a few weeks. But let's be frank, the only way is up on anything medium to long term. I don't think a few days or a few weeks trying to time it has any merit at all. We'll trade upside HVFs. We have a 3,768 target. And then I think it will rest a bit before the 4,000. And I think silver will rest before running 50. Once, twice, 3 times, then the lady. That's always been our take. So we need a third visit to the $45, $50 zone and probably a knockback of some degree. But that's okay. It's all okay. At an investment level, that's not material to me. It is at a trading level while I trade continuation. That's our expectations. That's our best expectations. That's what I really think. You know, I don't spend time here and effort sweating in the sunshine
to tell you some clever story that I've thought up and made up. That's what I think. You get to hear what I think, what I really think. That's all I do. Actually, it's easy. I don't even plan these things. I say, what are we talking about? And we go. And we unpack. And we start unpacking. That's it. It's a simple existence in terms of preparation for me. I don't do PowerPoint slides with a catch. I don't plan talking too much. It flows straight from their heart. And I can tell you, you need to stay in your gold. You need to only trade long, generally, and look for continuation setups where you can make profits and add to your loss. That's the best approach. And if you do this right, you need method and some understanding for trading. And many will say not everyone can do it. I will say most people could, but they need a really good method. They need a really good understanding. And we aim to give you that. Anyway, the camera's flashing red. That tells me probably it's a brand new one. I don't want to lose it. So I will say goodbye to you. Thank you for watching. Stay in the gold trade. Don't listen to the dollar maximalists. Don't try time a 40% discount on gold, because they'll keep dragging that up. 40% now on 3.6. You'd need to fall, half would be 1,800. You need to fall to probably 1850. You can't be sure of that. Don't do it. Stay in your investment, keep stacking, dollar cost average, and you're going to be winning. And recognize they're going to stigmatize you. They're going to say you broke the system, that they broke, through your protective behavior of your wealth. Okay, talk to you again soon. Bye for now, guys.
Tired of profit wipeouts and blown accounts from following trade signal groups and other YouTube channels? Looking for a better way to trade, reduce your stress, and minimize your risk? Become a skilled technical analyst and see the charts and markets in a new light using the successfully proven HVF method by Francis Hunt, while being surrounded and supported by a principled, structured, and experienced community. Enjoy a constructive learning environment while practically trading markets, supported by a bespoke platform run through browser and app, specifically designed to teach and engage you whilst learning and growing as the markets move. This is not a Telegram or Slack signal group. All trade ideas are based on a proprietary technical analysis process honed over decades, which is the HVF method, leading to trade ideas with fast-moving breakouts and tight stops, exact entries and exits, nuanced interim considerations, and ultimately, strong rewards. Submissions are graded and scored by Francis for potential high-quality setups, and we provide bespoke tools to help get the job done properly and with precision. Over time and with focused effort, you'll begin to look at charts and price action just like Francis. Community updates every day by Francis and our 3 webinars a week provide a 360-degree approach, which are presented by our experienced team of trade leaders to spot potential trades. We're a community of self-actualized individuals, spanning the globe and active 24/7, 365. The premium community provides a warm, supportive, and cooperative place for people willing to listen, participate, contribute, and to learn. We've changed thousands of traders' lives. Transform your approach to trading now. Transform your life. Book an introductory call with us on the link below.